On today's hot sheet, I'm discussing the drop in typical monthly housing payment, top risk factors for mortgage delinquencies, and real estate stocks. Today is Tuesday, July 23rd, 2024. I am Byron Lazine, and the hot sheet starts now. All right, welcome into the hot sheet. Let me know in the live chat which market you are tuning in from. We're going to get into this housing payment drop. That's a good sign for buyers as we move into potentially a lower interest rate environment. Also going to talk and discuss about these foreclosure numbers, where some of the risks might lie there. And if you're interested in making some money, we're going to talk stocks here before we sign off of the hot sheet today. I hear a lot of agents today saying, I want other avenues of income, not just agents, but other professionals in the housing industry. Well, you know your housing stocks and real estate stocks better than anyone. Are you investing in them? Do you have a portfolio of the ones you really believe in and the ones that might be able to make an impact in the future? Hit the thumbs up and make sure you subscribe. If you enjoy the only housing show on the internet that gives a 24-hour look back Monday through Thursday, live each and every single day that the markets are open. All right, let's get into it. Redfin reports that the typical monthly housing payment has now dropped $115 below the record high as mortgage rates have declined over the last couple of weeks. There are still plenty of buyers, and we saw this yesterday in the data with mortgage applications being down not only year over year, but over the last 2 years, they continue to decline. Most house hunters are waiting on the sidelines, okay? And they're waiting for what? They're waiting for that rate to get even lower. They're waiting for more affordability in their process to feel comfortable and confident that they can move forward and dip their toe back into the water. We've seen signs that when you get below, 6 and a quarter, you get closer to 6, you'll see a lot of these kind of poke their head out and some of these buyers poke their head out and start getting out there. Okay. So the daily average mortgage rates have dropped to their lowest level since February. So we're liking that right now. We're in a good moment. We've got some momentum happening on mortgage rates. We hope that continues into a potential September drop, which, the investors have 100% certainty on the betting odds that September is going to be the next federal rate cut drop. Of course, we have a FOMC meeting here this week, July 25th and 26th. I believe that takes place. So that would be Thursday and Friday. So we'll double check the dates. I think that's what the dates are. It's this week. We're going to get the FOMC meeting and decision on what they're going to do with the rate cut. Usually that'd be in the headlines here by now, big time. But we've had a whole bunch of headlines here the last week and a half in mainstream media, so it hasn't gotten that much attention. But it is this week, right, Haley?
I think they moved it.
They moved it.
This one says July 30th to 31st, but last week it was the 25th.
That is historic. I did think last week we were talking about it being this week, and okay, so here we go. You've got July 30th and 31st as the next FOMC meeting. So it will not be this week. It did say, I thought it had I thought it had this week, last week. But anyways, there you go. And we're in, 2024, July 30th and 31st. And then that September 17th to the 18th is when the expectation is that they'll drop. So I actually like the fact that there's a whole nother week. Could we get some other momentum that heads in to them making maybe an earlier decision? September, obviously 17th and 18th. That would come a whole month and a half before the election. So there's some positive vibes there about like, okay, if you get the rate cut, month and a half, people might be feeling better about the economy for 6 weeks before they go and place their vote. Interestingly enough, you've got the next meeting after that, November 6th and 7th. And of course, election date is the 5th, November 5th. So going to have some serious headlines that week in November as you get election day on the 5th. You get FOMC meeting on the 6th and 7th, unless they change that date. And then you're going to get another FOMC decision 2 days after the election. So September seems to be the target here. Again, investors have it 100% priced in. July, right now, the expectation is that they would stay the same as of now, and that'll be next week, July 30th and 31st. We'll get a decision from the FOMC. Right now, though, a home buyer on a $300,000 monthly budget can afford a $450,000 home. That's with a 6.8% mortgage rate. That's where we've been at on Mortgage News Daily. And that's the daily average of July 17th. So just here the last week, that buyer has gained about $25,000 in purchasing power since rates hit the 5-month peak in April, which could have bought them a $425,000 home with a 7.5% rate. Okay, so to look at it another way, the U.S. home buyer's monthly payment was $200,722 during the 4 weeks ending July 14th, 115 lower than April's all-time high. That's despite home prices sitting just about $100 shy of last week's record high. Okay, so you're seeing here some loosening up on the affordability as rates are dropping, and the hope is that will obviously continue here, and that's why I brought up the FOMC stuff. Obviously we'll get more headwind if we get certainty out of Jerome Powell's mouth next week. Hey, September, we're expecting to cut. When we saw that last time, the end of last year coming into quarter one, when they alluded to potential quarter one cuts, we saw a rate, a 30-year fix that got as low as 6.5, and we were starting from 8. So starting from that 7.5 peak that we just discussed here in the Redfin report, you could say best case scenario, we could be into the low 6s between now and September. It's certainly possible. And if that rate cut comes, which we haven't seen here since they started increasing rates, maybe it could even go lower. That's best case scenario. I'm not predicting that. I'm just giving you one option. And based off of what we saw last year, going from 8 down to 6.5 to start the year before we had hot inflation reports in quarter one, and it went back all the way up, peaking up over 7.5. We saw that type of 1.5% reduction. Okay, so July 17th, we're at the 6.83, lowest level since February, down from 7.14 just 2 weeks earlier. The 30-year fixed mortgage rate on the weekly was 6.89, down from 6.95 a week earlier. The mortgage purchase application decreased 3% from the week earlier, down 14%, of course, year over year. The Redfin's home buyer demand index is up 3% from a month earlier. So Redfin reporting home buyer demand up from last month, down 15% though year over year. Touring activity, according to Redfin, is up 26 from the start of the year as of July 14th. At this time last year was up 19% from the start of 2023. And they're actually referencing showing time, obviously owned by Zillow, not owned by Redfin. So activity, according to this touring activity, up right now. Google searches for home for sale, okay, up 4% from a month earlier, down 20% year over year. So when you look year over year, it becomes very apparent we don't have the type of demand that we had last year, and certainly not even going back, obviously, to 2022 when it was even much higher than that. So demand continues to be suppressed, but in the last, couple of weeks, you've seen a little bit of a pop, 4% from a month earlier. We're getting into a time frame, and I said this yesterday, where we're going to have a seasonal decline in demand. You see it every year, unless this rate can get close to 6. People will capture that moment, whether it happens to be October or what the traditional spring selling season is, because they've been starving for affordability. So if the rate cut comes in September and leading up to that, we get a September and October where we're living in a low 6s on the 30-year fixed, expect a fall pop in at least interest, at least that Google trend, that Google search, home for sale, to go up in September and October if we're in the low sixes. So don't just count on, okay, seasonal decline, here's where the market's going. Be ready to pivot, be ready to inform and educate people who have been on the sidelines what that rate would do, and just how Redfin did it here at this report. What's going to be the cost savings for me? They're talking about $115 right now in savings. What's going to be the cost savings for me with the new interest rate environment? Here's some more stats from this Redfin report. Median sale price just under 4% higher year over year. It's lower than some of the other metrics. They probably have more real-time data, though, and some of the other metrics are lagging, as we expect that home price appreciation to decelerate here as we continue to move through this year with higher inventory than last year, yet the same amount of pending sales. Median asking price, $404,000. That's 5.2% higher than last year. Median monthly mortgage payment, again, $2,722, 6.1% higher, but 115% below all-time set during the 4 weeks ending April 28th. Pending sales is down 5.6% year over year, biggest decline in 8 months. New listings, 93,000, according to this Redfin data, 6.4% up from last year. Active listings. Now, Redfin has active at 977. Of course, we look at Altos on Monday being in the 600,000s. Redfin is certainly using under contract and show in their actives as NAR would. They're up 18.4% year over year. When you take out the pendings and you just look at true actives like Altos does, and we look at that Mondays, you can go back to yesterday's hot sheet and the replay and get it. The number is actually close to 40% increase on active inventory. I hate the way NAR does it in Redfin because it's not a true active listing. If it's under contract, it's a different category. Figure it out, guys. Months of supply, 3.6. That's pretty much in line with where NAR is. Share of homes off market in 2 weeks, 39.1%, down from 44%. Median days on market, 32. That's up 4 days year over year. Share of homes sold above list price, 31.6%. That's down from 36%. Share of homes with a price drop, 6.7%. They're saying highest level on record. They're calculating this different than Altos. Altos has a much higher number, but they're saying highest level on record. I'm not sure how they're getting, from 38% on Altos to now 6.7% on share of homes with a price drop. It must be in a certain time period, a more restricted time period, I guess, than Altos. Average sale to list price, 99.5%. That's down 0.5% when we're getting 100% sale to list price. Okay. Here are some Metro highlights for the 4 weeks ending July 14th. Redfin's Metro level data includes 50 most populous U.S. metros. Select metros may be excluded from time to time to ensure data accuracy. Okay, metros with the biggest year-over-year increases: Detroit, Lauderdale, West Palm, Providence, Rhode Island, New Brunswick. Biggest year-over-year decreases for median sale price: Dallas and Austin. Pending sale increases would be San Jose, San Francisco, Boston, Newark, Cincinnati, while Houston, West Palm, Minneapolis, Virginia Beach, and Atlanta have the biggest declines on pending. New listings: San Jose, Vegas, Miami, Jacksonville, Seattle, while Atlanta, Houston, Warren, Michigan, Detroit, and Minneapolis have the big declines. Here's the median sale price year over year. Again, just coming off of a near at record high, according to the Redfin data on median sale price. All of these charts, and there's plenty more charts available for you in this Redfin report, will be available inside of BAMX so that you can easily download those charts along with our BAMX daily hot sheet show notes. Hot sheet show notes are available to BAMX members every single day for you to copy and paste and use inside of your communications with your database, one-on-one communications, or in email or blogging. Of course, you can copy and paste all of this information. So many BAMX members are doing that. Use code HOT to get 10% off of BAMX today. Okay. Redfin economist research lead summarizes by saying this: now that it's looking increasingly likely that the Fed will cut interest rates by the end of the year. Predictions are heavily, of course, in September. Some house hunters believe mortgage rates will fall more and are waiting for that to happen before they buy. Okay, so this is the Redfin economic research lead saying this. So the conversation I'd be having with buyers is I'd probably copy and paste this from the hot sheet show notes and this Redfin report here. And I'd say, hey, this is what house hunters believe. There's other data that we've shared here, and it's inside of BAMX that says the same. So you can articulate a case that, hey, this is what buyers believe. What's your experience house hunting when more buyers come off the sidelines? Okay, what do you understand about the demand on housing when these rates lower? What do you understand about when buyers do what they say they're doing, which is waiting? What's your experience and what's your expectations for prices? Okay, and articulating the fact that they're going to be in a more competitive environment. So we really have, three choices here, right? We really have three ways we can go about this. We can do what most other people are doing, most other buyers in this situation. We can halt our home search. We can get on the sidelines with them and wait. And when rates do lower, we can jump off of the sidelines and enter into the market with everybody else. You can imagine what demand would look like there. We can do what we're doing now, which is stay in the game, stay educated, be patient, continue to look at homes, continue to look at inventory, find the right opportunities. Or we could actually get more aggressive. We could actually right now go up in our price category, our price range, and start negotiating offers down while there's less competition in a little bit of a higher interest rate environment. Which of the three strategies are you leaning towards? The one where everybody or more people, the majority of people are jumping into that pool and there's going to be more competition, the one we've been deploying now, or the more aggressive approach? Which one of the three would you like to implement? But at least give them all the information and make them aware so they're not frustrated about a competitive environment that could come September and October if Fed cuts, if 30-year fix gets to 6%. That's the other thing. These are ifs. We don't have a crystal ball. We don't know. They were talking about 6% interest. They were talking about fives in quarter four of last year. I told everyone not to fall into that trap. So, what if you were to wait like everybody else and the rates don't drop? How would that make you feel? How would that change your decision-making process? All right. Let's go over to realtor.com. It's got a report. And again, you can get all that information. There's a bunch of good information on the Redfin one. You can get, obviously, inside of BAMX. But let's go over to this realtor.com report and talks about mortgage delinquencies. Okay, so their headline is the soaring cost of insurance and property tax right now is the top risk for triggering mortgage delinquencies. Okay, it's a top risk. It's not happening. Okay, obviously, if your insurance and your property taxes go up and you're sitting on $17 trillion of equity, which mortgaged homeowners have that much equity, you would sell the property. Okay, anybody with any common sense would do that. The hidden costs of home ownership, including rising property tax and homeowners insurance, are the biggest risk factors for rising mortgage delinquencies in the present market. It's according to a new survey. This is an auction.com survey that realtor.com has covered. Auction.com survey of leaders in the default servicing space found that respondents assigned 37% of a hypothetical 100 risk factor points to hidden costs, beating out any other factor, these costs that they can't predict. Okay. Relative risk of triggering higher mortgage delinquencies, rising insurance and property taxes, 37%, rising consumer debt delinquencies, 32%, rising unemployment, 15%, commercial mortgage defaults, 10%, and then falling home prices. Very few, 6% believe falling home prices is something that would increase delinquencies or be a risk factor for delinquencies. But the reality here is you have very little foreclosure starts across the country. Okay, here's May's foreclosure starts by metro area. And the year over year change, the blue equals negative 220%. It means foreclosure starts are dramatically going down. Okay. You see a lot of blue. You see a little bit of yellow, which is still on that, negative side. So, according to Lennon Tree, only about 1 in 3,100 homes in the U.S. is currently vacant due to foreclosure. One of the main reasons why foreclosures aren't common, they are not common right now, and there are not signs that they are about to be common, is homeowners are sitting on mortgage rates well below 5%. More importantly than their rate, it's their equity. If they got into trouble, they could sell and get out of this quite easily. And they have very manageable mortgage payments. Okay, so everyone that's sitting under 5% has a manageable mortgage payment. If they want to keep their house, they're not going to go delinquent. On top of that, strict lending standards implemented in the wake of the Great Recession help to ensure that even if their rate payments are too high, people who get mortgages aren't likely to default on them. Okay, so risk factors are the hidden costs. The how high will my insurance go? How high will my taxes go? That's what people are concerned about right now as we move forward. But again, continue to iterate to and educate that the foreclosures have not ticked up in a meaningful way. In fact, they've ticked down from last year. So everybody waiting for those to go up is going to continue to wait. Residential real estate stocks right now, in terms of builders, are completely taking off. Lance Lambert from Resi says it's the story of the haves and the have-nots. We're going to look at a chart here that shows the divide among residential real estate stocks. Giant home builders like D.R. Horton up 230%, Pulte up 222%, Lennar up 206%. Have had an incredible run since the end of 2019. That's well above the 70% jump in the S&P 500 index saw during the same time span. Many residential real estate stocks outside of home building, though, continue to underperform the S&P, which again was 70% during that time frame. Homes for rent is only up 38% during that time. Invitation Homes, which is a big holder of multifamily property, everybody complains, "Oh my gosh, they're buying up all these homes. Investors are buying up the homes. Invitation Homes are buying up all these homes to get a 20% spread. They could have taken all that money and gone into the S&P for a 70% gain." So the stocks aren't reflecting that they're taking over the entire market here. Lagging even further behind the S&P 500 stocks closely tied to residential, Zillow is only up 7% this decade. It's down 75% from the 2021 peak. Redfin is down 62% this decade, and it's down 92% from 2021 peak. Redfin down 62% this decade. Zillow at least up 7% this decade. Redfin has been a pathetic performing stock for quite some time. We're going to take a look at some of these other companies. Here's the shift in real estate stocks since December 31st. You can see Zillow lagging behind all of the home builders. Redfin, if you're holding that stock, just cut your losses, is probably the best bet. That is a really hard hold at this point, with no future model that's understandable to anybody for Redfin. Probably a target acquisition. That'd probably be the only reason I'd hold them right now, is you probably get a bump up per share if they were going to get acquired. Again, S&P 500 outperforming American Homes for Rent, Invitation Homes, Zillow, and Redfin. While Lennar, Pulte, and DR have just completely exploded. Warren Buffett obviously was also investing in some of these home builder stocks as recently as a year ago. Shift in home builder stocks since December 31st. All of the home builder stocks on this list are outperforming the S&P 500 since December 31st, 2019. Grab these charts inside of BAMX. If you're in one of those home building communities, might be useful to you in some type of some of your marketing and education. Just taking a look at some stocks a little bit further here. You've got CoStar, been very consistent. Okay, this is all time, so they're up a lot all time. If we go to the last year, they're actually down 16.5%. So market hasn't responded favorably to the billion plus that Amazon has committed to the residential sector, and obviously the interest rates are for any real estate stock or having an impact here. Last 6 months down almost 10%. So just within 6 months, they were a $97 stock, $75 sitting here today. Uh, Listen, this is probably one. This is not financial advice. I'm not a financial advisor. This might be one of those opportunities. If just look at the last year, there have been multiple peaks where they've been in the 90s and then valleys where they've been here where they are today in the low 70s. So, kind of been a little bit of a rock, even the last 5 years. Okay, you've got peaks down uh, um, in the range that they're at now, and then high 80s and 90s, then down again. So, you can you can see opportunities with CoStar. You can make the argument that hey, this could be $100 stock once again one day. If we go to Real, this is one of those stocks that's been on absolute tear here year to date. Beginning of the year, they were at $1.54 Real brokerage, one of the only brokerage stocks that's really um, taking off. $1.54 at the beginning of the year, $5 $0.96 here today, up 300% just on the year. If you go back throughout the past year, or, going back a full 12 months, you can go all the way back to last July, $1.68. There are some of these peaks and then, some of these buying opportunities. Okay, 435 down to 334 in April. That could have been a buying opportunity. Back up to 5, down to in the threes. Could have been a buying opportunity. Now up to 6. Will there be another buyer opportunity in the future, or is stock like Real going to continue to take off? There's an argument out there, and whether you believe it or not, there's an argument out there that Real is going to be 60,000 agents. They're at 20,000. So if they get, that type of growth, the argument I guess could be that the stock is going to continue to go up. Compass stock, here's one that has been gaining as of late, up 30% in the last month. If you bought Compass a month ago, you'd be up 30%. Year to date, they're up about 30%. Over the last year, they're up 15%. And then if you go out from their IPO, they're down 77% from their IPO. So kind of in that Redfin category when you look at how much they've lost if you bought on the IPO. All right, there's a little bit of real estate stock analysis. I don't know if I showed you the Compass chart, but there it is. That's since IPO down 77%, but again up 30% on the year. So coming into this year, if you said, "Hey, Compass is very undervalued. I like the value that they're sitting at," could have been a buying opportunity for you. Again, this isn't financial advice. I'm just pointing a couple things out based off of where the opportunities are in the real estate market. If you're looking for extra income, you know this business better than anybody. If you put your money on the national home builders on December 31st, 2019, you'd be up over 200% today. So that could be an opportunity there for you if you really understand this market and where to be a long-term holder on real estate stocks. The 10-year right now sitting at 4.234 as we enter this Tuesday. Yesterday's 30-year fix stayed flat with where we ended the week at 6.89. Okay. That's your hot sheet here for the week. Later on, or for Tuesday, we're going to continue obviously through the week. Later on today, I'll be releasing a new hot sheet or a new Real Word podcast. I'm getting everything mixed up. New Real Word podcast later on the channel, on the main video tab, or on Apple and obviously Spotify, wherever you listen. You can get the Real Word podcast. This one is going to be interesting. I'm seeing a lot of signs from brokers that are saying right now, do not even consider making available a buyer commission on listings. I'm going to get into in detail here what I'm seeing around the industry on this Real Word podcast. If you're interested in that, check it out later today. And if you're interested in being an agent of change and leading the industry forward, make sure I see you at BAM Mania in October in Las Vegas at Circa. Brand new facility, Circa Las Vegas, October 17th and 18th. BAMmania.com for ticket and speaker information. Head over to BAMmania.com to grab your tickets for BAM Mania. I hope to see you there. I'll see you on the Real Word later today. And of course, in the comments. Until then, toodaloo.